Punchchi Commission on Center-State Relations Report, 2010, Volume 3, Summary of Recommendations, Chapter 5, Issues in Center-State Fiscal Relations. Recommendation 1. The Commission recommends a comprehensive review of all transfers to states with a view to minimizing the component of discretionary transfers, particularly those channeled through CSS. Recommendation 2. As the resources at the command of the states are limited, we recommend higher central transfers to backward states to enable them to improve their physical and human infrastructure. Recommendation 3. To realize the benefits of past investments in backward regions of the country, we recommend that maintenance of assets already created should form an integral part of planning in these regions. Recommendation 4. We recommend the adoption of a multi-pronged strategy in the backward regions of the country, comprising public investment in infrastructure development, proactive policies to attract private investment, higher public expenditure on social sectors such as health and education, and area-specific strategy for the growth of agricultural production. Recommendation 5. We recommend that there should be greater focus on the issues of governance in the less developed states of the country. Recommendation 6. Suitable policy initiatives should be taken to improve the CD ratio of bank credit in the poorer states in a time-bound manner. Efforts should also be made to spread the habit of banking among the poorer sections of society to achieve the objective of financial inclusion. Recommendation 7. All future central legislations involving states' involvement should provide for cost sharing, as in the case of the RTE Act. Existing central legislations where the states are entrusted with the responsibility of implementation should be suitably amended, providing for sharing of costs by the central government. Recommendation 8. The proposed enactment for providing food security to the poor should clearly delineate the responsibilities of the central and state government in meeting the additional cost of implementing the provisions of the Act. Recommendation 9. The additional expenditure liabilities on states on account of the implementation of central legislations should be fully borne by the central government. An institutional mechanism should be put in place to verify the additional cost and to ensure reimbursement of such additional costs to states. It is recommended that issues giving rise to such liabilities may be included as a part of permanent terms of reference of the Finance Commission. Recommendation 10. The TOR of future finance commissions should be formulated in such a way that the additional commitments of states on account of pay revision are fully taken into account. Recommendation 11. The royalty rates on major minerals should be revised at least every 3 years without any delay. States should be properly compensated for any delay in the revision of royalty beyond 3 years. Recommendation 12. There is a case for reviewing the present arrangement regarding resource sharing between the center and the states and giving a share of the offshore royalty to states. Recommendation 13. A part of the sale proceeds of spectrum should be devolved to states for expenditure on infrastructure projects. Recommendation 14. We endorse fully the recommendation of FC 12 with regard to the sharing of proceeds of service tax in the event of the notification of the 88th Amendment to the Constitution. Recommendation 15. With the proposed introduction GST within the next 1 or 2 years, states will have concurrent power to tax services. We therefore do not see any need to change the status quo with regard to the levy of service tax in the interim period. Recommendation 16. The current ceiling on profession tax should be completely done away with by a constitutional amendment. Recommendation 17. The scope for raising more revenue from the taxes mentioned in Article 268 should be examined afresh. The issue may be either referred to the next Finance Commission or an expert committee to be appointed to look into the matter. Recommendation 18. The one size fits all approach to fiscal consolidation has constrained fiscally strong states to raise more resources. We therefore recommend state specific targets of fiscal deficit in the FRBM legislations of states. The fiscal correction path may factor in the variations in the initial fiscal situation across states and be made state specific. Recommendation 19. Quality of fiscal adjustment should be built into FRBMA targets. We recommend specification of targets with regard to maintaining certain levels of expenditure on social services, maintenance and creation of capital assets in the FRBMA legislations. Recommendation 20. With a view to deriving the full benefits of FRBMA, all off budget liabilities should be brought into fiscal accounting. Suitable adjustments should be made in the deficit reduction targets to reflect changes in accounting practices, if any. Recommendation 21. The FRBMA should be amended to clearly specify the circumstances which should warrant deviation from the targets. Recommendation 22. To bring greater accountability, all fiscal legislations should provide for an annual assessment by an independent body, and the reports of these bodies should be laid in both houses of Parliament, state legislature. Recommendation 23. It's necessary that the present system of fixing overall borrowing limits is continued to ensure adherence to FRBM targets. Recommendation 24. Interest relief may be offered on loans from the NSSF by aligning the interest rate on loans from the NSSF to the rate of interest on government securities. The present repayment period of 25 years in respect of loans from the NSSF may continue. Recommendation 25. It's the considered view of the Commission that direct transfers to implementing agencies should be stopped. It should be ensured that the state governments pay interest in case of delays in the transfer of funds beyond 15 days of their receipt from the central ministers. Recommendation 26. The maintenance of macroeconomic stability is the responsibility of the Union, and that states should be properly compensated for any additional expenditure they bear or revenue loss they suffer on account of measures taken by the Union to maintain macroeconomic stability. Chapter 6. Finance Commission Transfers. Recommendation 1. Considerations specified in the TOR of the Finance Commission should be even-handed as between the center and the states. There should be an efficient mechanism to involve the states in the finalization of the TOR of the Finance Commissions. Recommendation 2. We are concerned about the increase in the revenue collected through cesses and surcharges. We recommend that the central government should review all existing cesses and surcharges with a view to bringing down their share in the gross tax revenue. Recommendation 3. Because of the close linkages between the plan and non plan expenditure, an expert committee may be appointed to look into the issue of distinction between the plan and non plan expenditure. Recommendation 4: there should be much better coordination between the Finance Commission and the Planning Commission. The synchronization of the periods covered by the Finance Commission and the 5-year plan will considerably improve such coordination. We recommend that another attempt be made to synchronize the periods. Recommendation 5: FC 12 recommended that Finance Commission division in the Ministry of Finance should be converted into a full-fledged department serving as the permanent secretariat for the Finance Commissions. We endorse this recommendation of FC 12. Recommendation 6: we are in favor of Finance Commission adopting more sophisticated methods to assess the needs of backward states and providing them with higher transfers. Performance-linked incentive grants are likely to be more effective in addressing the problems of backward states. Recommendation 7: we are of the view the relative shares of tax devolution and grants should be better left to the judgment of the Finance Commissions. Chapter 7: Planning Commission and Plan Formulation. Recommendation 1: Planning Commission's role in the post-reform period should be that of coordination to ensure that the sectoral plans drawn by different ministries are in conformity with the overall objectives of the plan. This may not require parallel subject matter divisions in the Planning Commission. The practice of ministries seeking changes in approved projects may be dispensed with as long as sectoral allocations are adhered to. Recommendation 2: a case for multi-year budgeting with a firm budget for the first year and provisional for the second and third years assumes importance in the context of shortfall in the realization of resources envisaged for the 5-year plan. The FRBM Act envisages preparation of a medium-term fiscal policy statement, but this cannot serve adequately the purpose of multi-year budgeting. We recommend adoption of multi-year budgeting by the central and state governments at the earliest. Recommendation 3: while the Planning Commission may finalize the 5-year plans in consultation with states to ensure broad correspondence with the national objectives, detailed exercise of approving states' annual plans may not be necessary. The states should be given freedom to plan according to their own needs and priorities within the framework of nationally accepted priorities. Recommendation 4: plan outlays should be based on realistic estimates of resources and within the FRBM targets. Recommendation 5: steps should be taken to restore the share of state plan outlays to the previous levels. Recommendation 6: as the Gadgil formula was last revised more than 18 years ago, we recommend its revision in the light of the recent developments. The share of Gadgil formula transfers may be increased in a phased manner so as to restore the preeminence of these transfers. Recommendation 7: the number of CSS should be restricted to flagship programs of national and regional importance. Accordingly, we recommend reduction in the number of CSS and their funding in a phased manner spread over the next 5 years. There should also be flexibility in the guidelines governing the implementation of CSS to suit state-specific situations. Recommendation 8: the share of poorer states in EAP has been negligible. Efforts should be taken to enable the poorer states to access the EAP. Recommendation 9. The Second Administrative Reforms Commission, based upon the input received by a cross section of public opinion and most of the state governments, has come to the conclusion that the continuance of a standalone ministry with partial responsibility for the Northeast region is not in long term interest and have therefore recommended its abolition. The Commission endorses this view. Recommendation 10. The Commission is of the view that in place of multiplicity of institutions that are existing at present to address the problems of the Northeast, there is a strong case for setting up a single institution. This coordinating and planning role should be undertaken by the Planning Commission, which should set up a regional unit by subsuming the NEC Secretariat and placing it under a designated member of the Planning Commission, preferably located in Northeast and having the required empowerment and funds. Recommendation 11. In our opinion, the Planning Commission has a crucial role in the current situation, but its role should be that of coordination rather than that of micromanaging sectoral plans of the central ministries and the states. Recommendation 12. The Planning Commission needs to concentrate on bringing about a system of multi-year budgeting in conjunction with the Ministry of Finance. Planning Commission has an important role in making recommendations over a wide area of public policy along with the Reserve Bank of India, the Economic Advisory Council to the Prime Ministers, and other commissions and think tanks. Chapter 8. Fiscal Domain of Local Bodies. Recommendation 1. We endorse the recommendations of NCRWC for the synchronization of periods of the Central Finance Commission and the SFCS. Since the timing of the appointment of the Central Finance Commission is known, SFCs should be appointed in advance so that their reports are available to the Central Finance Commission well in time to ensure their consideration. It should also be ensured that the reference period of the SFCs should match that of the Central Finance Commission. Recommendation 2. We recommend adoption of a uniform approach by the SFCs, and as a first step in this direction, the TOR should mandate the SFCs to adopt the common template recommended by FC 13. Recommendation 3. This Commission recommends enactment of suitable legislation by all states prescribing qualifications of persons to be appointed to the SFCs. Recommendation 4. The ATRs and the recommendations of the SFCs should be placed in the state legislature within a period of 3 months from the date of their submission. Recommendation 5. We are of the opinion that there should be some initiatives in the direction of allowing local bodies to levy and collect certain state taxes and assigning the proceeds of some other. The state governments should not impose any restrictions on the rates of taxes transferred to local bodies. Such empowerment should be in tandem with recommendations made in Volume 4 of the report on time-bound devolution of functions and its completion by 2015. Chapter 9. Goods and Services Tax. Recommendation 1. We recommend the adoption of the dual GST to be levied by the center and the states concurrently on a common base with fewer exemptions. Exemptions may be limited to unprocessed food services rendered by the governmental organizations and local bodies. All area-based exemptions should be replaced by cash subsidy linked to investment. The aggregate GST base should be large enough to permit lower rates. The EC may work towards building up consensus in this direction. Recommendation 2. To address the concerns of states with regard to accentuation of vertical imbalances, the revenue neutral rates of GST should be worked out with care. The rates for the central and state components should be determined taking into account not only the present activities but likely revenue growth of taxes to be subsumed under GST. In the initial years, it should be ensured that the share of the states in the combined revenue receipts should not be lower than what would have accrued to them in the pre GST regime. Recommendation 3. As the resource base of the states is limited, it would be difficult for them to absorb any revenue loss. We therefore recommend that the center should compensate the states suffering revenue loss, if any, in the initial years of the introduction of GST. Recommendation 4. Polluting inputs and outputs may be subjected to a special non-rebatable levy by both the center and the states. In addition, petroleum products, alcoholic beverages, and tobacco products may also be subjected to a non-rebatable levy. Recommendation 5. The existing machinery for arriving at collective decisions on GST should be institutionalized on a permanent basis. Details with regard to the proposed institutional mechanism may be worked out by consensus. Recommendation 6. We recommend a one-time grant to states for putting in place adequate IT infrastructure preparatory to the introduction of GST. Chapter 10. Unified and Integrated Domestic Market. Recommendation 1. There should be further reduction in the number of commodities covered under the ECA and uniform liberalization of agricultural trade across states through suitable changes in APMC legislations. Recommendation 2. We endorse the suggestion of the Planning Commission that trade and marketing restrictions should be imposed only during exceptional situations of demand-supply dislocations and recommend necessary amendments to the ECA. The number of commodities covered under the Act should also be brought down further. Recommendation 3. We recommend that steps should be taken to fully operationalize the provisions of the Warehousing, Development and Regulation Act 2005. Suitable policy initiatives should be taken to encourage the private sector and cooperatives to set up go-downs and to specify standards for warehouse receipt system. Recommendation 4. We recommend subsumation of purchase tax cesses and surcharges under the proposed GST with a view to eliminating tax barriers to free trade. Recommendation 5. We recommend abolition of CST as it is a prerequisite for the introduction of GST. Exports from one state to another state should be effectively zero rated such that the revenues on interstate sales accrue to the destination state. Recommendation 6. We recommend the setting up of an Interstate Trade and Commerce Commission under Article 307, read with entry 42 of List 1. This commission should be vested with both advisory and executive roles with decision-making powers. As a constitutional body, the decisions of the Commission should be final and binding on all states as well as the Union of India. Any party agreed with the decision of the Commission may prefer an appeal to the Supreme Court. Recommendation 7. We recommend setting up of a common checkpost manned by the officials of two bordering states instead of multiple checkposts.